Welcome back, everyone. Are you searching for a dependable high yield monthly income from ETFs without watching your investment get depleted by NAV erosion? Today we're going to do a deep dive on two of the most powerful income generating ETFs out there. Both promise strong cash flow and, more importantly, have track records of avoiding NAV erosion, so your investment stays protected. Whether you're building your retirement plan or just want more monthly cash, this rundown is for you. First, let me introduce myself. My name is Wes, and for the last 2 years, I've been researching ways to make passive income in both the stock market and in cryptocurrency, and want to bring my results, whether good or bad, to you through this channel. If that sounds good to you, make sure you subscribe to this channel and drop a like on this video. I'd greatly appreciate it. Let's kick it off with the QQQI, a trailblazer for tech-driven income investors. The QQQI is actively managed, and its primary goal is maximizing what you take home each month while keeping your starting balance safe. How does it do this? By investing directly in the Nasdaq-100's all-star lineup, companies like Apple, Microsoft, Nvidia, and more. Then it overlays a robust, rules-based covered call strategy. That means every month the fund writes options on its holdings, collects significant premiums, and passes those directly to you as cash income. And the results speak for themselves. Over the past year, QQQI has produced over 14% yield, translating to nearly $7.35 per share paid out annually. And the kicker? These payouts are delivered every single month, giving you reliable, predictable cash flow. But income's only half the story. Many ETFs known for big yields end up slowly chipping away at your original investment, a problem called NAV erosion. That's not the case here. Since its launch in 2023, QQQI's total cumulative return has climbed above 30% thanks to capital gains coupled with those generous payouts. So it's not just your pocket getting fatter, your investment balance is growing too. Now let's take a look at QQQI's sibling, SPYI, the NEOS S&P 500 High Income ETF. SPYI starts with the classic time-tested S&P 500 index, the largest and most stable American companies across every sector: tech, healthcare, finance, consumer goods, and more. But just like QQQI, SPYI doesn't stop at holding the index. It uses a systematic covered call strategy, regularly selling call options on S&P 500 holdings and delivering those option premiums to shareholders as monthly dividends. And on the payout front, SPYI doesn't disappoint. Over the last 12 months, it's delivered a yield north of 12%, distributing more than $6.15 per share to investors in steady monthly increments. If you want passive, repeatable income, that's a powerful number. Crucially, SPYI also stands out because it protects your initial principal. Since launching in 2022, SPYI has maintained and even grown its net asset value. You get excellent cash flow without worrying that your capital will secretly dwindle away. For long-term investors, this means you can combine index growth with substantial income over time. Both QQQI and SPYI offer something rare in the ETF world: high yield monthly income paired with a history of protecting your original investment. QQQ shines for tech growth lovers who want to participate in the Nasdaq-100's dynamic potential, plus the safety net of options-driven cash payouts. Here I have a chart showing the QQQ and the QQQI. They mimic each other almost perfectly through this drop between April and May, almost down the same percentage. And then when they rebound back up into May and June, very similar structure on this. Who is the SPYI for? It's a perfect fit for people who want broad blue chip S&P 500 diversification, the comfort of America's top 100 companies while amplifying their monthly income. Whether you're reinvesting for compounding growth, supplementing your income, or just building a resilient cash flow pipeline for the future, both funds offer strategically managed, transparent approaches for monthly yield without the price erosion that haunts so many high income ETFs. So if your goal is to maximize monthly income and keep your principal intact, both QQQI and SPYI deserve a hard look. If you found this breakdown useful, hit that like button, subscribe for more ETF deep dives and income investing strategies, and tell me in the comments, would you choose QQQI or SPYI or both? Thanks for watching as always, and have a great day.